Hi everybody, Dave Bannister here with the Market Trend Forecast and ActiveTradingPartners.com. Wanted to take a look at the rather exciting action we've had of late because quite frankly there's a potentially very bullish situation developing here and still the potential for further downside bearish. So let's go over a couple of quick things here. Look at real fast the bottom of this chart in the S&P. We see a double bottom. Now typically with your traditional indicators that some technicians might use, you would look at this pattern here and you'd say, well geez, you know, that's an obvious ABC. Look, that's a double bottom. And certainly that is a possible pattern. These are often very bullish. So that's the one potential basic technical analysis bull count is a double bottom, or what sometimes they call it a W, where then after that you head up and start a new bull leg. So that's one thing we want to take a look at. The other thing I want to do is go back to my Elliott wave analysis of recent times, where again some of you may recall we kind of had a B, and a C pattern. Something I predicted back in mid-April would probably occur, and I had indicated here at this 104 area that is a 31% Fibonacci retracement of the 13-month rally in the S&P 500 and the other indexes for that matter. Well, so let's look at what's happened since that, because this is where we have either a bull or bear possibility, believe it or not. So let's look at the two of them, okay? Since that ABC pattern, oftentimes you'll get a corrective move to the upside, okay, and we've seen that. So here we go. We went up A, B, and C. Now that could have been the end right there of a B wave, meaning we start heading down, and that's what happened. So we started heading down. In fact, we gapped down, and that was really bearish, and to the point where we tested the lows here just several trading days ago, and then magically the market shot up. So let's take a look and see if we can figure out what's going on here. Here's one potential count that I have for the market. This again is your window that we're dealing with here right now. And so what we may have had was a bottom with an A, a B, and a C. That makes up the A wave. And then we have another count down here, A, B, and possibly back down here for a C. So we're running into maybe several ABC corrective scenarios where the bulls and bears really can't get any traction. But here's what I think's going on, and here's the possibilities for the market the way I see it. Basically, we bottomed out, as we all know, back at 104.38. We ran up in a normal ABC corrective to the upside, and that was over 8 Fibonacci days. So that could have been one set of waves for A. Here's your B, although straight down, but this is over about 3 days, which is also Fibonacci. And then C is underway now, and I'm betting it's going to go up to about that 111 area, what we're going to call an ABC flat in English. A, B, and then C comes into the same spot as the prior top. Then the market heads down this way, downward from that top to new lows. That is a possibility. So if the bulls are going to win this retracement on the upside, they're going to want to see the market go above this cluster here, above 111, and if that happens, it kind of takes out the ABC count with the downward leg, and then we may have one of these where we take off to the upside. So we're definitely at a precipice here, a bull and bear tug of war. I wish I could be more clear, but I think the bottom line is if we can get above 111 on the SPY ETF, which is here, decisively above 111, it's going to start to look pretty obvious that the 2010 lows are actually in. So let's watch the next couple of days. We're about 2% away. Let's see if it turns back down or continues higher. Dave Bannister again with the MarketTrendForecast.com and ActiveTradingPartners.com. Stay tuned and we'll do our best to see what we can decipher.